Hey, this is Chris. Today is Monday, February 26th, 2018. For those of you who got my email last night about the potential for a small run, did wanted to explain that. Last night, that was Sunday the 25th, we were sitting around over here where you can see my cursor. And the reason why I thought we might see a little short run, but I warned that it was not a bull market, but it was a potential run within a bearish trend, and you might want to take a speculative bet on it. And the reason I said that was you should always understand the 200-day moving average and the importance of that. So what I have on this chart is the 200-day moving average is depicted by this solid, thicker blue line. Now, the reason the 200-day moving average is always something you should pay attention to is it is kind of considered the golden moving average. Goldman Sachs defined that when a stock or security or equity is trading above the 200-day moving average, it's in a bull market. And when it's below the 200-day moving average, it's in a bear market. So if you're a kind of person with a long bias and you want to generally trade for upside versus selling short, you should only place trades when you are above the 200-day moving average, because that means you have an upside bias here as well, that the market momentum should assist you in your trades. Now, if you look what happened over here on Sunday night, I had noticed that this price had trended quite far away from its 200-day moving average, and it was likely that we might see a bounce up towards the 200-day moving average. Generally, you're always going to revert back to the mean, and you can see it repeating time and time again. If I go over here as an extreme case where you can see it really bounced far away from its 200-day moving average and then started snapping back pretty quickly. Now, the reason it's a speculative bet is because although it kind of started diverging a little far from the 200-day moving average, and I expected a little bit of a snap back up towards the 200-day, it's still a bear market because it's below the 200-day moving average. So we're taking a long position or a position to get some upside, but with the overall negative trend, being in the below the 200-day moving average. And you can see that this is a negative trend. If I just take a look here, right? I mean, this is pretty clear here that it's going down, and we've got a kind of a tight trading channel over here. So not only is it in a downward channel, you also have it below the 200-day moving average. So although I did expect this little snap back up towards the 200, the caution was that you are still in an overall downtrend, and nothing has actually indicated that we're out of that downtrend as such. So you're going into a long position in a downtrend, which is something I personally would avoid. Yes, it's nice to squeeze out some gains, but I like to play it safe. And I think there's plenty of money to be taken out of the market in a safe approach versus the speculative approach. So that's why it wasn't actually a buy signal that I had sent out, more just an interesting pattern for you to pay attention to. Now, what is interesting as we sit here today is that you can see we're in this downward channel. Here we did break out of this downward channel, and what could be interesting setup, because we might also break above the 200-day moving average, and we're on very strong volume, as you can see, and that's key. To break out of a channel or break above a certain moving average on strong volume is a good sign. So what I'm hopeful for is that we can actually get back into a bit of a bull run. Whether that's a couple of days or a sustained bull run remains to be seen, but I think we are setting up for some nice buy signals coming up here shortly, and I think let's see if we can break above the 200-day as well as get some real momentum and volume on that. For those of you who know my trading picks, I don't try and pick the bottom. I rather pick middle on the upturn once I know there's momentum. Again, there's plenty of money to be taken out once we have a sustained trend versus trying to guess the bottom and perhaps be wrong. So I'm going to wait a little bit on this. I know the speculative adventurous ones amongst you would be very tempted to buy at this point if we see a breakout above this 200-day. And that 200-day, interestingly enough, is also kind of almost a point of resistance here as well. So I think it's setting up for a good buy. Me personally, I'm going to wait for getting a validation that we're in a sustained upward trend, even if that does mean, missing the bottom point. So I will keep an eye on this, and I will issue an update as soon as I see something that is relevant. And of course, I'll be sending that out to the subscribers. If you're interested in these signals, please be sure to hit the subscribe button. All right. Thank you.